Hello and welcome. It's that time of year again. The budget session of Parliament will begin on 31st Jan and the Union Budget 2025 should be presented the next day, that is the 1st of February. The markets will remain open on Saturday, the 1st of Feb, to enable trading on budget day. This time last year, we did not see the usual frenzy in the markets because that was an interim budget due to the upcoming general elections. This budget will be the second full budget of Modi 3.0 government after the one presented back in July 2024. This time around, there are many big expectations on many fronts. This budget is expected to have a big impact on the stock market and the economy. Traders in the market won't ignore the possibility of making quick profits on budget day, but what about investors? Can you look forward to some announcement that may give a big boost to stocks in your portfolio? First things first, the budget will not change the fortunes of the stock market as a whole in one direction or another. Union budgets have a notorious reputation in the stock market for being forgotten by investors and traders on the very next day. As an investor, you should always be on the lookout for high quality stocks that are trading at reasonable valuations. That said, there could be some big moves in certain segments of the market. These could be either sharp one-day price moves or the start of a significant long-term trend. We believe many stocks and sectors will be impacted and investors should be ready to act if necessary. Before we come to that, just remember that this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. First, rural India. This should come as no surprise, as the BJP is in a coalition government without a majority of its own. So it will need to please its alliance partners. The two major parties in the coalition are focused on rural voters. Thus, the budget could reflect this reality. The stock market expects a significant spike in the government's rural spending. This is not a bad thing because most of India's poor live in rural areas. An improvement in their standard of living will boost rural consumption. Such policies always benefit companies in rural-oriented sectors. It's just a matter of finding the right stock. The rural sectors that you should keep an eye on are tractors, seeds, fertilizer, irrigation, and agrochemicals. But what about the stocks? Well, there are multiple fundamentally strong companies across these sectors. You can keep the following on your watch list for further evaluation: M&M, Kaveri Seed, Coromandel International. Please note these stocks are not recommendations. Mahindra & Mahindra, M&M. M&M is one of the leading tractor and auto manufacturers in India. After streamlining its operations in 2024, M&M is now fully focused on growth. It has exited 15 non-core businesses and unblocked funds worth 13.9 billion rupees. The company is now laser focused on its expansion plans. It has unveiled a massive investment plan of 370 billion rupees over the next 3 years. Any policy targeted at improving farmers' incomes will benefit M&M. Kaveri Seed. Kaveri Seed engages in the production, processing, and distribution of seeds. Its products include field crops and vegetables. The company constantly launches new products across segments, including cotton, maize, vegetables, and rice. These are all backed by strong R&D. It has gained market share in cotton seeds in states like Gujarat, Maharashtra, and Haryana. It is a debt-free, dividend-paying company with stable profit margins. If the government pledges assistance to farmers in acquiring the latest disease-resistant kind of seeds, it will benefit Kaveri Seed. Coromandel International. Coromandel International is part of the Murugappa Group. The company is in the business of fertilizers, pesticides, and specialty nutrients. It is one of the leading crop protection firms in India with a diverse range of products and services. The management aims to make the company a complete plant nutrition solutions provider. To that end, it has also introduced a range of specialty nutrient products, including organic fertilizers. Fertilizer stocks will be closely watched on budget day. It's a vital part of the agricultural economy, and the government will be in the spotlight as far as this sector is concerned. 2. Urban consumption. There are high expectations of some form of tax relief for citizens in the budget. Rumors have been flying around about tax relief for urban India, that is, high income earners. Now, we won't engage in speculation, but if these measures are taken, we should see a boost in urban consumption over the next few months. This would not be surprising. In the past, tax relief has been a precursor to higher consumption. This is because citizens tend to spend their extra income. The three sectors likely to benefit from this are travel, FMCG, and home improvement. You may keep the following stocks on your watch list: Interglobe Aviation, ITC, and Hawkins Cooker. Interglobe Aviations Limited, Indigo. Indigo is India's largest passenger airline. It's currently the 7th largest airline in the world measured by daily departures. It's also the first Indian airline to have a fleet size of more than 300 aircraft. Due to rising incomes, favorable demographics, and new travel trends, the company is well placed in the long term. There has been a notable slowdown in urban consumption over the last 1 year, so any step taken by the government to reverse this trend will favor the travel and tourism industry, and airline stocks will be the biggest beneficiaries. ITC. From being a one product category company, ITC is now a company with a portfolio spanning 20 categories with over 1,500 products. This is due to its expansion in the FMCG sector. The company is now among India's largest in the FMCG sector. Recognizing the rising consumer preference for natural and healthy products alongside traditional options, the company is actively expanding its rural distribution too. ITC is one of the biggest beneficiaries of the growth in incomes of Indians, both rural and urban. Its presence in FMCG, cigarettes, agriculture, paper, and hotels positions the stock favorably going into budget day. However, any increase in taxes on cigarettes in the budget will hit the stock hard. Hawkins Cooker. Hawkins Cookers is an Indian company which manufactures pressure cookers and cookware. The company has 3 manufacturing plants at Thane, Hoshiarpur, and Jaunpur. It has historically been a beneficiary of rising incomes in India. It's a steady growth company with stable margins and a good history of dividend payouts. The debt on the balance sheet is negligible. The company also has strong cash flows. The company does not get the attention it deserves when investors consider home improvement stocks as an investment theme. The stock has been an excellent long-term wealth creator. 3. Railways. The railway sector will be on the radar of most investors. The railway theme has been hot for more than a year now. We believe these stocks have more steam in them. However, they are almost completely dependent on the government's railway spending. This budget could bring some good news. The government has big plans for the railways. There are expectations of 3 trillion rupees being allocated for the modernization of India's rail network. The programs could include track expansion, Vande Bharat trains, upgrading of stations, the extension of the Kavach system, and high-speed rail projects. The entire railway ecosystem could benefit from this big growth in spending. Here are some stocks to have on your watch list: Ircon International, RVNL, and Titagarh Rail Systems. Ircon International. Ircon International is a large construction company dealing with railway infrastructure such as tracks, bridges, and electrification. The company focuses on railway projects, highways, bridges, and other large-scale projects, both domestically and abroad. With a strong reputation for delivering quality projects, it is a significant player in India's railway ecosystem. The order book of the company reflects its uninterrupted participation in large projects, both within and outside India. Rail Vikas Nigam Limited, RVNL. RVNL is the project executing arm of the Indian Railways. It takes up project management starting from conceptualization all the way to commissioning. This includes design, preparation of estimates, calling and award of contracts, project and contract management, etc. Over the last 20 years, it has contributed to over 25% of railway electrification done in India. The company has diversified into other segments such as roads, irrigation, industrial manufacturing, and electrical works. Titagar Rail Systems. Titagar Rail Systems is a leading manufacturer of freight wagons and passenger coaches. With the budget expected to focus on enhancing the railway's rolling stock, Titagar is well placed to secure new orders for wagons and coaches. The company is also a big player in the metro rail ecosystem. More funds for urban metro projects would give a significant boost to its revenue and profits. Number 4. Defense. The Union Budget 2025 is expected to have a huge impact on the defense sector. In FY25, the capital spending on the armed forces jumped 20.3% to an all-time high of 1.72 trillion rupees. This year's budget may accelerate the modernization process. We believe defense is a long-term megatrend that is here to stay. If you own defense stocks, expect more incentives for defense manufacturing, localization, R&D, etc. Many stocks could be positively impacted. Defense stocks, especially those in high-tech segments like sensors, radars, missiles, drones, etc., will benefit in the long term. Here are some stocks to watch out for: Mazagon Dock Shipbuilders and HAL. Mazagon Dock Shipbuilders. Mazagon Dock is well known for producing submarines and warships. The order book of this company currently stands at 400 billion rupees. The company's current projects include stealth frigates and submarines. Spending is likely for the upgrade of the Navy's submarines and the development of indigenous warships. Thus, the company is expected to see an uptick in new orders. Hindustan Aeronautics Limited (HAL). HAL is a leading player in India's aviation and aerospace sector. It has a dominant position in manufacturing fighter jets, helicopters, and other aircraft for the Indian Air Force and the Indian Navy. The order book of the company stands at over rupees 900 billion, with ongoing production of Tejas fighter jets and light helicopters. The budget could focus on the Indian Air Force's pending capital acquisitions. In this case, HAL will benefit from new orders of indigenous aircraft. Conclusion. Investors should not base their specific investment decisions on events like the budget. History has proven that the markets forget about the budget very quickly. However, some decisions are important for the long term. Such decisions will have a material impact on specific stocks. Investors should carefully assess themes like rural consumption, defense, etc., and the stocks to benefit the most. Investing in stocks that receive a boost in the budget could be profitable in the short term too, but you should exercise a lot of caution here. The rules of long-term investing don't change just because of a positive budget. You will still need to do your due diligence on any stock before investing in it. Thank you for watching.